Hi, I'm going to break down a chart and show you an indicator that may help you. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. No shock when you see all the toys that's around my desk. And it has a little bit of a theme. In fact, everything has a theme around here. Yes, I love science fiction. All science fiction. But does that help me with the charts? Well, funny enough, it does.
Are you serious?
Because it helps calm me down. And the other thing that calms me down when it arrives, because I can hear it being stirred at this very moment, and someone's about to walk in who stirs every emotion in my body.
You have caused confusion and delay, and terrible trouble to my trousers.
Hello, my dear. What did you like? Did you like that one?
What are you after?
Well, what am I always after?
Coffee!
Well, I was hoping it was something else, actually. We've actually, if you follow the videos, been trying to get her to wear one of them. Hold on, turn that round. There we go. And look like that. Because this is not a politically correct channel. I have got no time for snowflakes and wussies and all of that. And when Popeye pops up, he can sod off and all.
Cheeky fuckers.
Anyway, sorry. Let's have a little look at what's going on. Well, one of the members in the Discord group asked quite a good question. I'll flash it up. I'll show you. Or at least I will do when I find it. Let's have a look. It was in the Rogue. There. Regarding the awesome oscillator and how to read it. That's what I'm going to do. I'm going to break a chart, but actually show you how I would look at this as well. Because the awesome's quite handy. And what we're looking at here is a Discord group. We talk amongst ourselves, have a bit of a sing-song. Lift each other up when things is going good, even when things is going bad for that matter, and we chat all things Forex, indices. It's not all fun and laughter we do. Well, actually, maybe it is all fun and laughter looking at this. We do go through it all and kind of mark up my charts, show them what's going on. If there's a trade, I'll break it for them and tell them before I do it. And there's a full training library here of videos that are not available to the public. So from there, the easiest way I know how to show things is just to put it on a chart and trade it in front of you. It's the only way I know how to do it. And when you see these charts, they're real time. Always, whoever you're watching, if you highlight the mouse on the current candle and look to the bottom down here, it'll show you the date and time. Now today is the 18th of August and this is the 2 o'clock candle on an hourly chart. Because many I see, they're rolled back and they're cherry picked. I don't like that. I don't think it's fair. So we're looking at a day trading situation. All right, you've come to market. You've decided that you want to trade. Now, one of the best ways to day trade is using two charts. You want what's called an anchor chart, sort of an hourly chart like this, just to get a feel of what's going on. You know, a higher time frame. Now, that could be anything. It could be 4 hour, a daily, a weekly, whatever your passion needs to be. Talking of passion, what you do? She's flashing at me, boys and girls.
Oh, that's disgusting.
I've got me on. Sorry. We have a jolly time in this place, you know. We really do. That's one of the wonders of working for yourself, and this is Winky's office. We can get away with blue murder because, well, who's going to sack us? Then again, she sacks me on a regular basis. She's forever telling me off. Right, okay, sorry. What are we looking at? Well, is the market actually going anywhere? No, it's not really. Not on the hourly chart anyway. That's quite range bound, and it has been since the 10th, sort of the last week. And if we scroll it back, you can kind of see that it's moving up, but it's not lighting the world on fire. All right, so that's the first thing you want to be taken away from this. There's a general trend to the upside, but they're not strong. So you kind of want to be working on the basis of just be conservative with your targets. So what can we see? Well, let's draw a couple of zones in just so we can see. So there was a low down here that you can see there. All right, we'll just draw that in for now. All right. So what does that tell us? Well, it tells us there's a definitive low here, and you can see it's come in, it's stalled, and it rattled away. All right, that is there. That's kind of the last point that I want to pay attention to. Why is that? Because it's double tapped here. It's come down, it's tested it again, and now it's pushed away. All right, and it's based kind of off that. But look at where it closed. It didn't close in that sort of zone. All right, and the zone was basically just the base of that engulfing these two candles. All right, it tested it, went away, came back, and off. Now the next time it came down was here. So what it did was it created a lower high and a higher high. See, from these here, because that's higher than that, and that is higher than that low. Lower high, higher high, and then it's done it again. See here, but it's now pushing down for a bit of a test. But look at the tails. Upward pressure, upward pressure, upward pressure. So this is a little bit of a case of what might be going on. Well, there's another part to this. Yesterday I showed you how to use a fib. Now we've already got a basic idea that this is overall on an upward trend. We've seen that it's rejected this level and pushed up. And we can work with this leg, this here. Okay. Now, have we got anything above it that we can use to gauge the price? Well, yes, we do. We can put another zone using the brushing the top of that with these, because there it is. There's the stall point, and it's stalled up there. So we're looking to gauge the pricing. All right, so that's where it got to. So across there, we'll just put a little there. So that bunch here, there, doesn't have to be pip accurate. It really doesn't, guys. What you're trying to do is just frame the price. Well, there it is. It's framed. You know, it's going to oscillate between these 2 points. Why? Because it's done it before. And it gives a bit of structure to the market. So as I said, we were talking about a fib. So if I draw a fib on this, there, it's kind of the lowest that it's got to, and run it across. That gives me a target point of the 38 and the 50 as a zone. Okay. And this is just a simple way to build a chart up. So there's a target zone just there. All right. So what are we looking at? What have I created here? Framed the price. I've looked at the overall trend. The overall trend set up. We've looked at market structure, which is telling me again it's up because it's double tapped here. Lower high, higher high, higher high, and those closing points were kind of lower. Well, they're certainly lower higher than this, unless this knocks the equation out of what's going on. So where's an indicator come into this? Well, if we drop on an awesome oscillator and just alter it slightly, and what an awesome oscillator is, by the way, it's a visual representation of moving averages. Now the two moving averages that are on are both Fibonacci numbers, which is a 5 and a 34. And if you put on a couple of moving averages, just drop that on there, and go 5 and 34, just like so, and draw a vertical line where they cross, which is there, it pretty much marries up to that, where it crossed the center line, as you can see, that is there, of here, because that flattening bit is the 0 line, center line. So when the histogram crosses it, it's really a moving average cross. So instead of having loads of lines on your charts, you can just have an oscillator below. Now, there's various ways you can do this. If you put a 21 and a 200 on, which is pretty good for fast markets, because we all look at a 20 moving average or a 21 moving average as a reference point. And then also the 200 is a good barometer for the overall trend. Well, what we can see here is it is trading above the 0, which is telling you the 20 is faster than the 200. So it's confirming that the overall trend is up. But what it's also doing is showing you that there's a little bit of a downward moving, because when you have moving averages on your chart, they don't actually show you too much when there's going to be a change in sentiment. It's because they're lagging. However, the way the calculation is on the awesome, it can kind of show you where that volatility is coming to a slowdown. So you can use this to get out, you can use them to get in, all sorts of different things. However, on this occasion, what we're going to be doing is dropping this down onto a 5-minute chart, because we've now used the oscillator to confirm that we are going to the long side. And what we're going to do is take it away, just like so. We're going to place an 8 moving average onto the screen, just like so. And then when that price crosses that 8, we're going to target either one of these zones. And it is that simple, guys. And that's it. That's how you break and read a chart. It is not as difficult as you think. Yes, it takes a lot of experience, and by all means come to Scruffy Squad and I'll go through it, because there's a lot of other parts to it that you kind of need to figure out. But essentially that's it. You're looking for a general direction of the market. You're putting a framework around that market, and then you just need a reason to get in. So on this situation, we looked at it naked, decided that it was going up. We looked at market structure, in other words, zoomed in a little bit, in a bounded area, still decided it was going up. We put an awesome oscillator on, which we changed the dynamics to two moving averages that are well recognized as being able to see a trend or see a direction, which again confirmed the direction all on the hour. And then we've dropped it into a 5-minute chart for a reason to get in, and that reason to get in is for the cross of the 8, and simple as that. But going back to the awesome, just while we've got a couple of minutes, what it did confirm was this part here, you know, where it was selling off somewhat. I'll just drop that back on and I'll show you. So what did we have? We had 21 and 200. There you are, you can see it here. But that's nothing to worry about because it's holding above the line, and they'll often do that. You'll see moving averages come, well, there, look, give you an idea, it came up and then went away. So there's no reason why that can't come down and swoop up, because the overall trend is to the upside. Okay, but that's what we're using it for. And this red part confirmed waiting for something else. Okay, in other words, just hold your ground a little bit. If it was green and we were going into the 5-minute, the chances are it would have been above the 8, and then you could just get in and trade it up into the zone. Very, very simple. So let's drop this back to a 5, just like so. Don't need that anymore, because once you get down onto a 5-minute chart, your indicators are pretty much worse than useless, and you're just looking for a trigger. So my trigger is going to be a break of this 8. So all I'll do is I might just follow the price down. As soon as it closes above it, I'm going to look to get it based on what I've just worked out in front of you. Okay, so I'll just leave the camera running. I'll just drop a quick order in, and the idea is to get somewhere between 5 and 10 pips. And if I can do that relatively quickly, happy days. Okay. Well, guy, just a second. What do you mean? It's coming. You cow.
Hey?
So, right, okay. We're still having a jolly time here today. As you can see, it's done pretty much what I needed it to do. I just put a basic target in of 10 pips because it's an example, and I don't really need to trade for living this week.
There you go.
And there you go. Ah, you're an angel.
Yes, it was on its way.
Well done. Get your reward in heaven. There you go. Because of, as I was saying, if you follow the videos, I've done quite well this month, and I don't really need to trade a great deal more. So I'm concentrating on kind of showing the guys a few tricks. And this is one of them. And it's a very, very simple process. And that is ultimately trading in a nutshell. Keeping it simple. There's no mystical combination of things. I wish there was. However, if you are going to trade, keep your charts very clean, like the way that I've done it. The less clutter, the better. And look at the price itself. Frame the price, and then just use a couple of indicators to kind of confirm what you already suspect. And you'll find the fruits are there. That's about as easy as I can boil it down, I guess. And, well, that's it. Anyway, so I'm curious on your thoughts. By all means, drop the comments below, subscribe, like, share, all that good stuff, because it genuinely helps the channel and motivates me to do more of this. And well, I guess if you want to see it real nitty gritty, come down in the Scruffy Squad and you'll see it. Nuts, bolts, everything's laid bare. And when I do live streams, it's all open forum, Q&A. You can ask me anything and I'll tell you exactly how I do it. And simple as that, guys. So enjoy the coffee. Good luck with your trading. And as always, do what you love. And the money will follow. See you all in the next one.